How is Six Flags holding up in this treacherous and fearful environment for the consumer? Six Flags is the largest regional theme park operator on Earth, with 18 parks throughout North America. I think all of these parks will ultimately benefit from the huge decline in the price of oil, because now consumers have a lot more money in their pockets, and it's much cheaper to go on a long drive to reach the company's closest theme park. Now, Six Flags reported after the close today, and the company delivered an amazing number, a 6-cent earnings beat off of a $1.50 basis, thanks to a higher-than-expected revenue, slight uptick in attendance, and a 6% increase in total guest spending per capita. But even better, Six Flags announced a 10% dividend boost, which brings its yield up to a notoriously BIG 6%. I don't have a lot of those. Their monster buyback is also important, and Six Flags is one of the most shareholder-friendly companies around. I should mention that right up top. While the stock is down slightly since we spoke to the CEO back in May of 2013, that dividend boost makes me think it could have a real upside going forward. Don't take it from me. Let's check in with Jim Reed Anderson, the chairman, CEO of Six Flags, hear more about the quarter and where his company's headed. Mr. Reed Anderson, welcome back to Mad Money.
I'm glad to be back, Jim.
All right, Jim, I got to tell you, this looks like a pretty knockout quarter. I was looking for $522 million for revenues. You did $542 million. You crushed the consensus. You have really good attendance. Another competitor, which we like very much, Cedar Fair, did not deliver as good a quarter. Is it weather? Is it technology? Is it the new rides? What made it so that people who I know thought that you were going to miss the quarter were dead wrong?
I think we have a series of factors working in our favor that help deliver the 7% revenue boost, 8% in EBITDA, and 15% in cash EPS, Jim. And I think it comes because we've got innovation in every single one of our parks, something new everywhere. And a lot of those new attractions are record breakers. That, combined with the value offering that we are, has meant that we've delivered literally 16 record quarters in the last 4.25 years. Pretty amazing.
Yeah, why do you think that people didn't have a little more faith? I mean, because you have this great record. You're in different geographic areas from your competitor, and at the same time, it's very clear that you've done this refresh. It seemed like everybody was kind of shorting your stock ahead of the game plan here.
Well, you know that there are always doubters out there, but we've stuck to our promise. We've kept the promise that we will deliver shareholder value. We've done that through the increase in dividends pretty much consistently. And as you said, we've taken the dividend up now to 52 cents a share per quarter. And that is an amazing 6%. And in addition, we're using any excess cash that we have to buy back shares. And between dividends and share buybacks, we've returned $1.4 billion to shareholders since we emerged from our restructuring over 4 years ago. It's pretty amazing stuff.
It is. I remember when you had, I got to tell you, I absolutely know that, because the previous management hemorrhaged cash. You guys are spewing cash. Now, do you have a 13% compound annual growth rate on the EBITDA and 22% on the earnings per share?
We've had very strong growth in earnings per share. Actually, if you look at cash earnings per share, it's phenomenal. The last 3 years, we have averaged close to 15%. If you go back further, it's a much higher number. But realistically, the last 3 years, and we've set this new goal, Jim, of achieving $600 million of modified EBITDA by 2017, and that has the same sort of growth rate, actually a little slower. We're assuming maybe we'll deliver about 13%, and that sets us up for a very nice dividend, sustainable, growing, and at the same time, it allows us to buy back shares on an ongoing basis while, of course, investing in our parks appropriately.
All right, Jim, was there any thought given to Ebola scare when you decided to boost that dividend big? Did anyone say, you know what, we ought to see whether this thing dies down? Or were you confident in the system and the containment, and therefore it didn't come up?
I'm absolutely confident in the system and containment. We saw no effect at all from Ebola, and I think our systems, if you think about the medical systems across the U.S., they're brilliant. And I think we will manage this very effectively.
Have you, when you took into case the dividend, did anyone say, you know what, this gasoline price may be for real, and we are the single biggest beneficiary in America of a lower gasoline price?
Well, it's funny you say that, Jim, but as you know, you and I have talked about this before, we've debated this. Even when gas prices went up and they were headed towards $5 a share, we were still powering through, growing attendance, growing our profitability, growing our cash. And so I look at it and I say we win either way. If the gas price drops, I think it's good for us. If the gas price goes up, we're very stable. This industry as a whole, you know, you talked about the industry, but I feel great about it. It's an industry that has stable, recurring revenue. It also has a scenario where there are very high barriers to entry, so tough for someone to break in on the industry. But I think, I'm biased, we're so well positioned. We're in the top 10 DMAs. We've got amazing new product coming in every one of the next 5 years. I think the company is going to do very, very well.
Well, Jim, I got to tell you, I was on a conference call Coca-Cola today, conference call McDonald's. I wanted to know, these companies tell me the challenge consumer. Consumer can't be all that challenged if they're spending all that money at your theme park, can they?
Well, you've seen it in this quarter. The numbers you're looking at right now, we've seen an 8% increase in guest spending per cap. That's come from tickets, which we are obviously pricing up, as I described to you on the two prior occasions I visited, but also in park. We see people spending about 6% more than last year. And I think that's because we have a tremendous value offering, innovative products, and people want to spend a day creating memories for themselves, their families, their friends, Jim.
Well, you know, I include my family among them. I want to thank Jim Reed Anderson, Chairman, President, CEO of Six Flags Entertainment. Fabulous quarter. Congratulations, sir.
You are most welcome. And don't forget that dividend, three times the level of the S&P 500.
It's true. It's true. And you know I love dividends. We've talked about that many times. People, if you want growth and dividend, there are only a handful of companies that are out there. Six Flags has one of them. It's a good stock. Mad Money's back in.